All right, now we're talking back to work here tonight. Hope you guys had a fantastic weekend. Hope you enjoyed the break. Had a busy week ahead of us. We're back to work tonight. It's Monday evening after all, getting ready for Tuesday's trading session. We get some big news tomorrow. You know that, right? We get some big moves on the charts today. We get a lot of great trades. We're tracking for inflation, CPI Tuesday. As always, I'm going to cover all my favorite trades in tonight's video to make sure you get a game plan to make some money tomorrow. Before we jump in though and get this party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And as always, I appreciate you guys tuning in. If you enjoyed the video tonight, do me a favor, will you? Hit that like button. Thank you so much for tuning in and supporting the YouTube channel. But enough of the intro, right? CPI is coming at us tomorrow. Let's get ready. Where are the best money-making trades going into what is arguably one of the biggest news reports of at least the month, if not the quarter, if not the year here for tomorrow? Well, boy, everything's pretty bullish, right? S&P bullish, Nasdaq bullish. Oil is bullish. You can see there as well. But I'll tell you though, you'll see tonight there's a lot of reasons why the buyers may not have as easy of a job as it looks at first glance here right now. Buyers are definitely looking for some pullback opportunities right now. We get some great pullback opportunities here. But you'll see tonight. You'll see tonight why I think you'd be wise here tonight to keep some reversals on our radar for tomorrow. We're sitting, of course, at major resistance, and we get some long-term bear biases right now, right? So we're going to go over the pullbacks. We'll definitely go over the buy side on all three of these markets, and we'll definitely cover the sell side here for tomorrow as well. Now, speaking of tomorrow, before we jump in and take a look at my favorite trades on each of these markets, in case you've been living under a rock the last few weeks, everybody is really tuning in or waiting for really the next two big announcements. Tomorrow, of course, is the CPI number. Wednesday is, of course, the FOMC. And then we got quad witching coming in on Friday. We'll talk more about that as we get deeper on in the week here. The big news for tomorrow, though, is that CPI report. And if you've been watching these markets the past few months, you know that the CPI numbers have just been incredible volatility around these news events. So please be careful overnight. Please be careful tomorrow. My job tonight is a little bit difficult, right? Because the last few times these CPI numbers come out, we're getting these huge candles, right? So we'll do our best tonight, get things all prepped up, talk about some different scenarios I'll be watching for tomorrow. Really got to think about it though. Tomorrow is all going to be about what happens after that news comes out. Let the dust settle. The place to be tomorrow is in our trade room. We open up at 8 o'clock Eastern time. We'll watch the mayhem come out around that CPI number, and of course we'll trade the reaction. So we'll do our best here to get prepped tonight, go over some scenarios, but again, be prepared for a very wild reaction to that CPI report, and come out and join us tomorrow, 8 o'clock Eastern time. I also want to bring to your attention, this is the last full week of the year for a lot of professional traders. My final newsletter, believe it or not, will be tomorrow evening, not Wednesday evening, tomorrow evening, my final video newsletter of the year here this year. I can't believe we're talking about finishing up the year here, but you got to think though, this end of this week will probably be the last full week for a lot of professionals. You got Christmas week next week, and of course the New Year's holiday. So of course tomorrow night, the last video newsletter of the year. As always, I'll have you guys covered in the trade room if you're a student of mine. But be aware of that. Tomorrow night, you've been warned, last video of the year here. So we'll make this one and tomorrow night count. Back to our charts though, all right? Everything is looking pretty good. Head of that CPI number. And of course, I'm going to cover all my favorite trades on each of these charts tonight. Make sure you watch all the way to the end because I will save the best trade ideas, the best strategy tactics all the way to the end. Let's go S&P first. S&P, Nasdaq. We'll wrap things up on the crude oil. Keep in mind here, as we go through here tonight, these will all be tick charts. So first things first, these are all tick charts. You can see the time frames in the upper left-hand corner. And also be aware too, the S&P and the Nasdaq are very, very similar, right? So what I talk about on the S&P can absolutely be applied to the Nasdaq or the QQQs and vice versa, right? So keep that in mind. For the most part, there are three key insights right now that are tipping us off to where the best money-making opportunities are going to be for tomorrow. I mentioned earlier, this might not be as easy for these buyers. We are still very much in a bearish overall environment right now. It's a bear bias. Look at a 60-minute chart, for example, right now. Had that big move down last week. The buyers had a great shot last Friday, didn't they? Last Friday, buyers had that beautiful bull range and that gorgeous opportunity to rip this thing higher, and they failed, right? They collapsed at the end of the day. So we're still very much an overall bear bias. I'm going to use that as a filter or a lens to look at this chart here for tonight. The next really big clue, this may not be as bullish as the buyers make it seem right now, is we're an inside day right now. We're actually inside. We're just a little bit above Friday's high and a little bit below Friday's low. Anytime we have today's range was pretty much completely inside yesterday's range, we know the best way to trade that is to buy low, sell high, and ultimately wait for a breakout. So now we have a very strong move higher. There's no doubt about the strength of this move here today. Anytime we see a strong move higher, what do we expect? We expect a pullback and a retest of that level. Once we get a retest of that level, do we then go back down again, or do we break out and run higher? And we got a little more resistance up overhead here on the S&P, we'll talk about here in a moment. So we're very bullish in the very short term, right? Longer term stuff, a little more bearish. And again, Friday's high, Friday's low, this big range, which by the way, was all based on that PPI number, right? This PPI number from last Friday may end up being a puppy dog compared to the CPI report, or the reaction to the CPI report that we see here for tomorrow. Okay, so that's what's going on in my head right now. That's what the charts are telling us. How do we make some money off this information now, right? It's nice that we know what's going on. How do we make some money for tomorrow? So anytime we have a strong move like this, we know that basically buyers are looking for a pullback, right? So on the next pullback, buyers want to get some action, right, buying that pullback. Sellers, of course, they're hoping this thing fails so they can run back down into that trading range and ultimately kind of complete this, rotation back and forth as we go. So buyers want to buy a pullback. Sellers, of course, they want a reversal. Now, the big variable right now is that overall bearishness that we have on the 60-minute. So as we pull back here right now, really the way that I'll be looking to buy this pullback is really by trapping in the sellers. We know we've got some resistance up overhead. We know we're overall pretty bearish overall here still, very bullish in short term. So I have to anticipate there's going to be a lot of bears here trying to short this thing back down. I don't like the short just yet because of all the strength that we have here. Let's talk about that. So as we pull back here, the easiest way to make money in this scenario will be to anticipate those bears coming in and try to use their stops as fuel. And to do that, we're going to use what I call a failure setup. Now, because we're such a strong run higher, I'm going to let these bears try a couple times. Let them try once, let them try twice. Once those bears dig their heels in, once they commit, think about where their stops are. And what I can do is I can use what I call a failure setup, right? Look for a nice strong signal candle there, right? Same failure patterns you guys are learning in the free trading classes right now. But I want to use those stops as fuel to go back up and retest that high. So bull market in an overall bearish bias at resistance, let's anticipate some bears and let's buy right into their stops for a run back up to retest the high. Now, be aware of this, right? Be aware of this. This thing, because we are inside Friday's range, because we have that overall bear 60-minute bias right now, there's a good chance, right, these bears may hold that pullback and run it lower. So, for example, we get the pullback, but now, rather than the bears coming in, trying a few times and giving us a chance to buy into their stop losses going back to the high, no, the bears come in now. They go, no, we own this market right now. We're taking it lower, and they jump off that moving average. We call these 1, 2, 3 reversal patterns. Very, very simple pattern. Now what I'll do is I'm going to mark off that low, mark off this high, and then repeat after me. First test is the best test. And what I mean by that is if I mark off the lows of that move lower and I bring it up around these highs up here, the next time we touch the high of that channel, or the first time we'll be right there. That will be the first test of that channel. Now, we talk about this a lot in the free trading course, right? My favorite entries on the top of that channel are oftentimes a bull trap, right above a prior swing high. I always like it whenever we get kind of above the 21 moving average. Buyers will come in, they'll try to buy it. I can sell into their stop losses for a failure, right? And then of course grab that pullback combo as we go lower. Where would the market want to go in this point, right? So again, it's a 1, 2, 3 move. Remember, I'm not going to sell that first pullback. Why? Because it's so strong, right? The strong move is a really, really big important factor. But if I can hold that pullback and jump lower, then I can get a lot more aggressive. Trap, buyer failure, pullback combo. Range is a magnet, and you have to think the bears, if they get their way tomorrow, they'll go all the way back down, because again, we're still kind of flushing out this big range that was formed from last Friday, right? Now, there's one more kind of type of reversal that is often very common in these scenarios, these inside days like this, is that pop and grind. So for example, let's say the bears come out at the open in Asia, right? They pop it lower and they begin to grind down, right? And grind down and grind down. These are very, very easy. They're a little bit different, of course, right? They don't pull back to the moving average and jump, right? The market kind of falls apart, kind of rolls lower like it's rolling downhill, right? We draw the trend line off that low, bring it up around that high. See what I'm going with this? Then mark up those prior swings, and that's where the money is right there, guys. Right there. Right? Again, I can't really pick the top on this because we're too bullish in the short term right now, too much momentum, right? But if I can get it to pop and grind down, you can see how I do this, right? And then again, all the same entry patterns you guys are learning in the free trading course, the bull traps, the buyer failures, the pullback combos, right? The price action cycle stuff off the top of that channel. Which reminds me, by the way, I've mentioned this this free trading course and all the entry patterns. I know that most of you guys have taken the free classes. You've learned all these setups. I know because you're sending me emails every day about your P&L snapshots, making money with stuff. I love it. But hey, if you're one of the few people who are watching right now who haven't taken that free class to learn all these entry setups, what I'll do is I'll put a little link up here for you in the upper right-hand corner. Grab that link and take the free trading course. Because I'll tell you, the strategy that I teach in that free class series will show you a remarkably simple trick to know where the winners are most likely going to be each day. And I'll teach you 4 simple entry patterns to help kickstart you making money on your own account. If you're tired of missing the best trades right now, if you're taking too many losses, grab that link, take that free class. It's perfect for someone trying to make the jump into full-time trading. That way you'll know what failures look like, right? The pullback, trapping the bears, and retest that high. You'll know what reversals look like, right? We talk a lot about 1, 2, 3 moves, or 1, 2, 3 reversals, and you'll know how to time the entry off the top of that channel. And of course, one of my favorites, that pop and grind going lower, find that channel. We'll talk a lot more about pop and grinds here as we go deeper into this video right now. The next kind of question, so now we know how to deal with the pullback, right? Now I want to think about, what if we go higher? You know, what if we don't get any pullback at all, right? What if this market keeps on grinding higher here? How would you say the best way to do it? How would you buy it? How would you sell it? What's the game plan if we keep going higher? Let's go to the NASDAQ. The NASDAQ, of course, like I mentioned earlier, is very similar to the S&P 500 or the SPY, right? Remember, these are all very much interchangeable. We really, for the most part, have almost identical situation right now. We still have, again, look at a 60-minute chart, and this is the 21 moving average. Put the 21 EMA on a 60-minute time frame, and you'll notice that, again, last Friday, the buyers had a beautiful shot at grabbing this and jumping off that 21 EMA, but they failed miserably, right? Why should I trust them again? Right? Why should we trust them right now? Still pretty bearish on that 60-minute, and I find that to be a very good filter on the faster time frames. And again, inside day, right? The inside day is even more obvious on the NASDAQ, right? I mean, in all reality, it's almost like one big narrowing range brewing right here. Does this look like a great place to be? Not really, right? Not really. So anyways, same basic idea as the S&P. When I'm inside yesterday's range, be careful. We're trading against breakouts. We're buying low. We're selling high, and we'll wait for breakouts. And of course, right, we definitely have a strong move higher. There's no doubt about it. That's a very strong move. And whenever we see a strong move, we have to respect that strength because that's the short-term momentum. And for us short-term traders, you want to really try to get on the side of that short-term momentum. All right, so we talked about this already, right? Buyers want to buy a pullback by trapping in the bears. If the bear's successful, we end up going back down into that trading range. And again, we do expect all hell to break loose tomorrow at 8:30 Eastern time. So bear with me here on this, right? We will probably have to do some adjustments tomorrow morning in the trade room, opening up at 8 o'clock Eastern time with front row seat for that CPI number for tomorrow. Okay, so how do we trade if it goes higher? What's the game plan here if we go higher? There's a few scenarios that I want to talk about here as we go higher. First of all, let's talk about one scenario where we pull back, we trap in those bears, right? Just like we talked about in the S&P, and we buy it back up and they retest the high. What happens once we retest the high? Remember, anytime we see a strong move, we're expecting that retest of the high. That's why I like that what I call a two-try failure to use the seller's stops as fuel because we're overall so bearish, have to respect them as well. What do we do, though, once we get back to retest the high now? Now we have a lot of potential to short that double top reversal. Now, very, very simple. We're going to now, because at this point now, I'm at a level of resistance, right? Again, last Friday's high. But what would you say in this scenario? What would you say is the short-term momentum right now? Still pretty bullish, right? So if I want to pick a top in a short-term bull market like this, I need to use the same trick I used to buy that pullback. I'm hoping now the buyers will come in and try to buy once, try to buy twice, and I can use their stops on this. I really like this trade. I really wish the CPI report was later today tomorrow because this could be interrupted by that CPI report. Anyways, remember, I want to get that deep pullback, trap in those bears, go back up to retest the high, and then once I get that retest, mission accomplished. Now, let's see if some buyers come in. Not a good spot to be buying, right? We're buying at major high there, major high here. Remember, overall bear market. So what we want to do is trap in those buyers, right? Let those buyers dig their own grave. Let them buy once, go lower. Let them buy twice, right? You'll learn all about this stuff in that free trading class, by the way. Once they try a couple times, where is their pain? Where are their stops? Sell right into those stops. And then don't forget, because we have that overall bearishness in the market, because we're at this big range potential right now, this could really set up to be one of the best sequences of the session for tomorrow, where, for example, if we can get a nice strong failure off that high here, this could easily begin to tumble down. I can now find a new channel by drawing off that low, mark off that high, and I can look for that trap or a failure off the high of that channel. Okay, I call these double bottom reversals, and they're oftentimes a very common sequence, right? Again, pull back, trap in those bears, use their stops for fuel, take out that high, trap in the rookie buyers. We have to assume the buyers who are buying up there are rookies, right? They're buying high, they're chasing FOMO, they're trying to miss out on that breakout. You're not going to get very good, consistent long-term results buying high and selling low, right? It's backwards, right? So buyers try a couple times there. We're selling into those stops, and I really like this trade over here because, again, it's that overall bearishness, top of the range, and try to get that run back down into that range here. You will see a lot of examples of these, that kind of two-try failure off the high into that first test is the best test. You'll see a lot of examples of those in the free trading course. And then think about it too. What if we pull back, we trap in the bears, and then we break higher? right? We don't retest the high and then 1, 2 back down, right? I mean, if the CPI number comes out tomorrow and it's a big miss, if the CPI number comes out really low tomorrow, thank goodness, right? Hopefully it will. The market may really respond very bullish. So as we go higher here, think about these kind of 3 types of breakouts as we go. First of all, keep in mind, if we keep on going higher, right? If we keep on grinding higher here and grinding higher, not a lot changes, right? So I'm going to go out, find some prior swings, get that deep pullback. And again, because at this point, we're right around those big highs out there, same thing, right? 1 try, 2 try, and go from there. Now, that's one thing to keep in mind if we do keep going higher, but kind of grinding up the ladder here right now. Another breakout pattern. There are 3 or 2 more breakouts I want to talk about. Let's say, for example, here, right, we get that pull back, we end up running back higher here, pull back, run back higher, and the buyers come in and they jump off that, right, off that moving average. What do we call that? We call these 1, 2, 3 breakout patterns. I'm going to mark off that high. I'm going to mark off that low. You got it, right? Find those prior swings and grab that. And again, I'm going to keep it simple here tonight. You'll learn more about the entry tactics in the free trading course. But again, right, we're not going to buy that first pullback. Okay, we'll buy the dip, trap in the bears. We're not going to buy that first pullback. But if they can show us proof 1, 2, 3 and go higher, yeah, now we have another strong move going higher. We've now broken through that overhead high. We're undoubtedly now looking for a measured move, right? So 1 leg, 2 leg, right, for a measured move. We know when it comes to these 1, 2, 3 moves, the first leg and the third leg are oftentimes very symmetrical, right? So we pull back, we pop up, we hold that, right? We hold that pullback and we jump off that moving average. We clear well through overhead resistance, mark off that high, mark off that low. You got it. And again, looking to trap in below a prior swing, trap in below the moving average. Use stops as fuel. Think about this. First leg, third leg, right, are going to be very symmetrical as we go. Overhead here, I got levels at 57.5, and then, boy, look at all that wide open space, 12, 1, 58, and 3/4. The buyers may have a very big wide open space tomorrow if the CPI number kind of disappoints, if you will, right? Comes out lower than expected. Or 2, right? They pull back, we trap in the bears, we jump, and we what? And we grind. The pop and grinds are very common in news days or kind of lower volume environments while we're waiting on news, such as the FOMC coming on Wednesday. I can mark off that high now, right? Kind of bring this back a little bit, right? So again, we pull back, we pop up, we grind now going higher. Something comes out, news comes out, pop and grind. We're marking that high, we're marking that low, we're drilling down, we're finding our prior swings. Prior swings are where traps live. My favorite out of all the entries, underneath the moving average for failures, right? Pullback combos. Again, you guys are learning a lot about this stuff in that free trading class, right? So you got your first leg, right? First leg and third leg are going to be your objective there as we go higher. Again, though, be very careful buying it as it goes up into this area. All right. So those are the 3 scenarios we're probably going to be looking for here as we go higher here. One of them, again, I do like that retest of that high, that 1, 2, back down, find that channel and dump it back down from there. I really like that sequence a lot because of the overall bearishness and the top of that range. If we keep on kind of grinding, going higher here, not a lot will change on this. We're going to still have that channel coming in. We'll still try to get that pull back, that trap, and that retest of that high. Not a lot changes there. Where things get really kind of good for the buyers is, of course, getting that pull back, that pop up, and then holding, right? That hold and that jump off the moving average, getting well, obviously clearing above that high from yesterday. We're now an outside day, right? We talked about an inside day earlier. Now we've got that 1, 2, 3 move, that 1, 2, 3 breakout. I can mark off that high. I can mark off that low. Drill down to find those swings and then grab the entry coming off of this. And you guys will learn more about the entry patterns in that free trading course. First leg, third leg, that'll help you kind of fine tune that exit target, right? And again, remember, unless we see a very strong break going higher here, unless this thing pulls back and just pops and really grinds going higher, you really got to be careful buying pullbacks right now because we're still inside that high from yesterday. And again, we still get that bear bias here on the 60-minute, right? So same basic idea as this on the S&P, looking for a pullback, trapping some of these buyers, trapping the bears for the long, right? Really try to focus on trapping in the sellers around these highs, right? Trapping in those sellers, right? In order to respect the location of this and back up. Once we get there, then we break out and go forward from there. All right, guys, I apologize for repeating myself a little bit back there, but I wanted to make sure that we really solidify this as it goes higher here. And again, we're gonna most likely will need to make some adjustments on this tomorrow once we get down to business in that CPI number in the trade room tomorrow morning. How about some oil? How about some oil here as we go? Wrapping things up here tonight in a relatively short video here. We get a big news report coming tomorrow. How about some oil right now? Boy, a lot of similarities here in the oil, but you'll see there's a lot of differences here as well. First things first is we are very bearish on the 60-minute chart right now. Look at a 60-minute chart, put a 21 moving average on there, and you can easily see the buyers are not getting any relief here. It's a very strong move higher, right? No doubt about that. It's a very strong move higher, and again, anytime we see a strong move in one direction, we expect to see a pullback and a retest. But look at where that strong move went. It went right to a pendulum swing. What's a pendulum swing? Well, if you look back at last Friday, we had a range on this chart last week to end the week here this week. Look at how symmetrical the amount that we went below that range. I mean, come on, you really can't make that stuff up. Now, given, I will admit, this range could be a little bit lower. It could be a little bit lower, like down around there. So it might be closer to that. But still, come on, right? I mean, come on. Look at that area. So you'll learn a lot more about pendulum swings and ranges. Pendulum swings off a range-bound market, that's that being a range over there, the amount we go below the range is oftentimes equal to the amount we go above the range. So what do you think, right? Big bear move down, very bearish here overall. Pendulum swing resistance. Is this a great place to be a buyer right now? I'm leaning on no. On this one. Now, there is a bullish range here, right? And this is one of the bigger clues here on this chart. Very bullish, right? Into a trading range. Now, when I think of a bullish market into a trading range, I think of the buyers, for example. The buyers want two things whenever we have a bull market into a trading range. And again, I say bull market, very short term, right? Short term bullish. Two ways to trade a bullish range here. Okay, one is to get below the range, trap in those bears, right? And use their stops as fuel. We got a lot of support. I like that area a lot. It's a very nice area to be a buyer. Again, we're still overall pretty bearish, and that pendulum swing thing is very, very convenient, right, for this to fail right there. But all things equal, right? Take away the bear bias, take away the pendulum swing. All things equal, the buyers love that area right there. That's one way to make money in a bullish range. The other way is a breakout, right? And of course, we talked about like a 1, 2, 3 breakout. We've talked about a pop and grind breakout. I'll give you guys a few more that we can use here tonight on this, right? So breakouts, right? A breakout going higher would also be an option. And we've got, of course, a big juicy level there at 75.44. You got to think 75 is a big round number. It will be a magnet there as well. And of course, we got back to 77 as we go higher here. So as a buyer, that's how buyers want to do this. Now, what do the bears want? The bears are going to keep it pretty similar to the S&P and the Nasdaq, right? The bears are hoping this fails and we go where? Go back to the other side of this big range, right? So the bears are hoping the buyers come in and fail and we rotate back down again. You can think of almost like a big triangle forming here, right? So bears would love to get down here where buyers will undoubtedly try to pick it back up and run it back up into this trading range. Again, think of that trading range right now as a magnet, right? Not a great place to buy way up here. Our big challenge right now is the strength of that move. The sellers would also love to see a double top reversal, right? Double top reversals are very, very common in range markets, like back here, for example, right? We had that trading range. They made that strong run down. Is there any surprise why they pulled back and tried to get a retest of that low? No, right? That's perfectly what you'd think would happen. Anytime we see a very strong move in one direction, we have to respect and expect that retest. So this is why with this move right here, I mean, come on, take that pattern, flip it, and that's the short back down from there, right? So it's we call these double top, or in this case, or previously double bottom reversals. Okay, anyways, a lot of things going on right now. How do we make money off this, right? How do we make money off this? Well, it's really very similar game plan, right? As we go lower here, we have to anticipate this overall bear bias, and rather than simply trying to buy that pullback right now, we'll trap the bears in, right? Let those bears dig their own grave and then use those stops, because you know what happens is when the bears get stopped out, they have to buy their way out. And so you can think about it, right? Buyers are buying down here. If the bears get stopped out, the sellers become buyers as well. You will learn a lot about these failure patterns, of course, in the free trading course. So it's a 2-try failure because, again, remember, the lens we're looking at this through right now is a bear bias, right? That overall bear market. So to be a buyer at major resistance in a range below us, I need a little bit more than just some divergent signal. You know what I mean? I want to see the bears get trapped in here and use their exits as fuel for that move. And then as we go higher here, this is a very likely breakout, by the way, at this point. We see a lot of times we go trap the bears in, and then as the market kind of rips back up and goes higher, all of that momentum blasts it right through. Right? So what would that look like, by the way? Right? We go lower. We trap those bears in and we run and go higher. Now what? Now, show me you want this thing. Show me you want some more. Okay? Because we know it's not enough to get a strong move. Show me with this range, pull back, hold that pullback and jump. Right? Give me one of those 1, 2, 3 moves. Right? One of those 1, 2 jump off that moving average. Prove to me, buyers, that you have what it takes to keep it going higher. If you can, wonderful. I'm convinced. I'll mark that high. I'll mark that low. I'll find those traps. And again, get below prior swings. That's where traps live. Get below the 21 moving average. That's where some easy failure winners live. And again, remember, don't forget, right? First leg, third leg. I can't go over all the stuff here in this video, but first leg, right? That first leg of the move, that leg right there will almost always be equal, right, as we go higher from there. But now you know kind of how to look for the entry pattern. Or we pull back, trap in the bears, we pop up, and we grind, right? Very, very common. Pop and grind, even easier. Mark that high, mark that low, trap below prior swings. Don't miss that first test, right? Don't miss that first test off of that low. And you can imagine if we get that pop and grind going higher, that prior high is a great area of support to grab the entry off of, right? I'm going to use that however I possibly can. But again, they have to show us they mean it. Right? I'm not going to buy that first pullback right there. Not a very good buy, not in an overall bear market. If we had a very bullish overall bias right now, absolutely I like that buy. Because that freight train momentum will just want to push this thing right through that high there. All right, so going to keep that on your radar. Now, what do you think? If we pull back, if we trap in these bears here right now and go back up to retest the high, now what? how do we sell this thing? We talked about this on the Nasdaq, right? Because remember, we're overall bearish, so I like the short, right? We're sitting right at some major resistance. I like the short. What I don't like is how short-term bullish that momentum is. I'm a short-term trader, so I have to be very keen on what the short-term momentum is. And like I mentioned, when markets go below the range and they kind of snap up and run like this, there's a lot of momentum that will want to break out. Now, again, overall bear bias, the odds are not as good in this scenario, which is why I like the short side here. But again, within reason. Right? We're not going to go picking a top on this thing, not with a bull market into a range like this. We trap in the weekends, right? We let them pull back. We let the buyers try once. We let them try twice, and we sell right into those stop losses, right? That's how you trade off of that high. We're not picking tops and bottoms. We're not predicting tops and bottoms. We're letting the buyers, in this case the buyers, in this case the sellers, we're letting them dig their own grave and using their stops. Okay, I get it. We don't want to wait for the entry, but I'll tell you, it dramatically increases your odds of success. Because what happens is sometimes it'll keep on going. And I don't want to sell into it, right? Not in that bullish momentum turn off of that low. All right, so keep that in mind for that double top reversal off of that high. And again, if they pull back right now, if they pull back and they hold that moving average and jump going lower, where's the next objective? It's down here at these lows, right? Think about one big range forming here, right? Find that 1, 2, 3 breakdown. Now, again, I'm not going to sell that first pullback. Why? We're too bullish into a range right now. But if the bears really are strong, if they're really serious right now, they'll take that lower. You can find that new channel. And once you get that new channel, then you've got a much more reliable trade, right? Whereas this is probably a probably a 40, 60 trade right there, right? 40 wins, 60 losses, trying to sell that pullback, right? This one right here, 75, 85%, right, of a win right there. What do you want, right? What do you want? You want a 40% winner, right, which might make you feel good. You're picking a top on the market. Or would you rather simply get nice, easy, almost boringly consistent, right, 80, 85% winning ratios off the high there? I know which one I would take. I want the consistency, right? Save the surprises for birthday parties, right? I don't want surprises. I want consistent results from these setups. That's why I prefer to wait for that momentum to turn, because again, we're so bullish right now, and then, right, and then hit that high, grab that bull trap, grab that buyer failure, take out those lows from there, right? Or again, right, it pops up or pops down, grinds down. We find that grinder there, right, and we're grabbing that short from there, right? So pops down, grinds down, runs lower. The grinder is usually a pretty good giveaway there, and looking for the entry off of it. Now, just like we talked about the S&P, the Nasdaq, we're kind of fleshing out this big range here right now. So what do you think? If we found our way all the way back down to that low again, what would be the way to buy off the low? The same thing goes for the S&P and the Nasdaq. As we go lower here, and obviously I'm simplifying this right now, right? But as we go lower, that momentum will be very, very strong, right? We have to expect those bears are going to want to hold this and keep it going. So let them try once, let them try twice. Look for things like a crown reversal to buy it back up. Again, I'm at major support right now with a range above me. I like the buy side. I don't like the sell side, but that momentum at that point will be so darn bearish. Why? I got to wait for, right? Anticipate they want to retest that low, right? So give those bears the benefit of the doubt. Let them try a couple times. Light up those stops like a Christmas tree and run the sucker back in. Or we go running lower. The bears come in, they say, no, this is our market, right? They sell that pullback, they retest the low. Remember, anytime we see a strong move, we expect that retest. Once they get the retest, now, is it a good place to sell short now? Hell no. No way, right? At the low of this big range right here. Very bearish, though. Very, very bearish. What do? You trap them in, right? Use those sellers. Use their exits as fuel. That's a bear trap at that low, or a two-try failure, if you will. And then as we go higher, I like this trade right here. Find that new channel off the high, that new channel off that low, and grab that pop up as we go. These are always one of my favorite trades. Again, it's basically one big trading range. We're trying to rotate back and forth in this example, right? They retest the low. You're trapping those bears, use their stops as fuel, and then as we begin to rotate higher, bingo, we grab that entry, that first test, right, off the low of that new channel. All right, guys, I hope all this is making sense. I know I've covered a lot in a very short period of time, but that's why we have our free trading course to go over the basic stuff with you guys. So grab that link in the upper right-hand corner. Grab that link. I'll put all the special links you guys need, by the way, in the description of the YouTube video. So grab that for me, and that way you'll learn kind of the fundamentals of this. And don't forget, tomorrow morning, every morning in the trade room, 8 o'clock Eastern time, I can make this a whole lot simpler. I have the entire system ready for you. All the video classes, of course, the trade room each morning, and I have a series of worksheets that we use to qualify or disqualify each trade we take in our trade room. Again, I'll put all the membership links, all the free class links. I'll put all the stuff right in the description of the YouTube video. So grab it, get registered. I'll see you tomorrow morning, 8 o'clock Eastern time. If not, I will see you guys tomorrow evening, same time, same place, for the last video newsletter of the year. I'm getting a bit teary-eyed over here. I'm cutting onions already. I'm kidding with you. I'll save the stuff for tomorrow. If I don't see you guys tomorrow morning, 8 o'clock Eastern time, you better come back tomorrow night and we'll do it all again and get a game plan ready for the FOMC announcement on Wednesday. Any questions, any problems getting into any of the free class stuff, call the office, send us an email, jump on live chat. I'm always here to help out. And rest up. Enjoy the evening, guys. Big day coming tomorrow. Hopefully I'll see you tomorrow morning, bright and early in the trade room as a member. If not, we'll see you guys same time, same place tomorrow night. My name is Joseph. Be well. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.